welcome to Making Money in the Markets with VectorVest. Let's just put my camera onto me for a second here so you can see me. My name's Russell Markham. I'm the Director of Education for VectorVest Australia. So I'm really excited to have you along today because I'm going to show you something very powerful that helps our subscribers make money. If you're not a subscriber to VectorVest, this may be of great interest to you today to take a closer look. Okay, so with that said, how are we going for time here? Bang on 11 o'clock Sydney time equivalent here on, what's the date? 27 August. Time is flying. Right, before we get going today, please note our license numbers. They all are. All right, so we're all licensed there with our financial services license. And in addition, I need to note to you, general advice only. I'm licensed to give you general advice only. I cannot advise you personally. Speak to a financial advisor for personal financial advice. Past performance is no guarantee of future results. Forecast backtests used or discussed today. It's a guide only, and those actual results may be affected by unknown risks and uncertainties, and therefore may differ ultimately from the results achieved. Right, I'm going to jump right out of it, and I'm going to jump straight into it. And so we've brought this up before, but it's worth repeating again because I'm going to take it a little bit further this time. And so in VectorVest, what we have here is we have a phenomenal tool called Trading System Viewer. Now, just to be clear, we are not fund managers, we are not brokers, right? So we do not manage your money, we do not place any trades. What we offer here for educational purposes, and a lot of our subscribers love following these trading systems here, we show you using the VectorVest tools how to make money in the market. And I personally, I follow several of these portfolios myself. Derivations of them, and they've been very, very successful for me. So with that said, let's go and have a closer look. I'm going to sort the trading systems here by 1 year returns. Okay, you can see here they all are. All right, there's only one that's gone just slightly into the red, but if you take into account the dividends and franking credits, then that pretty much breaks even. So what I want to do today is I want to take a little bit of a closer look at one or two of the trading systems. So if you're new to VectorVest or you're checking out VectorVest, you might say to yourself, well, you know, how could I use this to my advantage? And so let's say I am a fairly conservative investor and I only want to look at the all odds. I'm just not interested in any of the other type of stocks out there. I just want, give me all odds or give me, you know, big blue chip type stocks. What if I was to look at this type of methodology? All right, well, let's look at the all div payers. So I'll click the details there, and VectorVest then loads up the details for me. Okay, so I load up the details and I have a bit of a peek here. I go, okay, this portfolio has been assembled for the attendees of the Ultimate Retirement Solutions course. Well, the good news is now you don't have to have done that course. It's open to everybody. And it goes on to note here, the 10 stock portfolio predominantly consists of fully franked shares at any given time, having plenty of diversification across sectors and industries within the All Alls index and holding solid, high-yielding dividend-paying stocks with a demonstrated track record of meeting or exceeding dividend expectations year in and year out. Stocks with consistently smooth upward price patterns are favoured over stocks with more volatile track records. The returns in this portfolio are before any dividends and franking credits. So I have a look at it over here and I go, my goodness, it's done okay, right? So you can see since 2013 it's had a pretty good trend. Here it went a bit sideways from 22 through to about 24, but you know, the market was under a lot of pressure. And look at that, in 2025, it's more than making up for it and breaking out in a big way currently. So I take a bit of a close look. Oh, okay, well, maybe that would appeal to me. Now, the thing that occurred to me is, well, it's all very well saying that, you know, we're going to pick some of the best all dividend payers out there. Why not just buy an ETF that tracks the all odds, or why not just buy all the stocks in the all odds? One of the issues with buying all the stocks in the all odds, it's expensive, right? There's over 400 stocks, I believe, and so that could prove to be quite difficult. All right, well, what if you were to get an ETF? Well, I'd be happy to buy an ETF that tracked the all odds, provided that the ETF, was going to outperform what we could do here at VectorVest. So the question then comes down to, well, what has VectorVest done taking some of the best stocks in the all odds compared to the all odds? So let's see what the all odds has done and compare it. So to begin with, let's see here. So from 2013, so 2 January 2013, as of the start of 2013, it's up 376%. All right, so let's go and have a look at the all odds roughly, right? So if I minimize out of here and I go to watch list viewer in VectorVest, and I've got the all ordinary, so we provide some wonderful watch lists to our subscribers, and give or take, things get added and taken out, but this will give me a good idea. So going back to 2013, again, you can go and verify that through third parties. Go and look at Yahoo Finance and the likes just to verify it. But what I'll do here is I'll pull it back. So it looks to me in 2013, give or take roughly, it's gone from weighted average there across all the stocks and all odds at 5.53 to about 12.3. So, whoops, sorry, just bumped my microphone there. I'll just move it out the way. Let's just compare that. So 12.3 minus, what was it back there? 5.53. All right, divided by 5.53. So it looks like times 100. Looks like it's gone up around about 120. So call it around about 130%, give or take. So since, actually, that was the end of December. We said 213. Okay, pretty much the same. So it's gone up about 130%, give or take, right? You can verify that through a third party. So it's gone up 1.3 times, or 130%. Okay, and if I then compare it to the trading system viewer, all right, and we noted here, what have we done here? In fact, it was open there. I'll just close that one out. All right, so we've done 376%, or 3.7 times. And the all odds over that time period is done 1.3 times. So it then answers my question, would I want an ETF that tracks the all odds, or would I prefer this, which is way outperformed the all odds? So this one here stacks up much better to me. Then the next question then comes down to, well, okay, so this one has done fairly well, but what would that entail? It might just be a lot easier for me to buy the ETF, and then I just don't have to worry. I can just buy one ETF, just hang on to it, and it should work out, right? Let's move it over here. So, well, let's have a look. So I'll scroll down here. What does this entail? So remember, it's a 10 stock trading system, right? So no more than 10 stocks. And so when I went to go and have a look at the all odds, I noted, and I'm sorry if the camera didn't move across, I think it might not have, but let's just show you what I did just in case you've missed out. I went to the all odds watch list, and I just looked at the watch list, and I pulled it back until 2013. All right, so there we go. Pulled it back to 2013, and I had a look in terms of how it's performed, and I noted it's gone up about 130% over that time period. Very volatile period here, another big volatile period here. And I noted to myself that I actually much preferred this version of the all odds. This is not designed to track or mimic the all odds. It's just picking the best stocks within the all odds. And instead of going up 130% over the same time period, this has gone up 370%, or 3.7 times. So it's way outperformed the all odds. And then the next question comes down to say, well, if I prefer to do this, how much work would it entail? And so what you can do each and every day in VectorVest is you can log in and come in and have a look. And so here are the current holdings. So APE, ticker code Eagers Automotive over here. And we noted to our subscribers, just careful, this is US dates, 11th of July. All right, 11th of July. So just the other day, 11th of July, it's already up 13%. And you can see here, 25 March, so April, May, June, July, August. So what's that, 5 months later? Fleetwood, not bad, 24% 5 months. Keener Securities, up 21%. That was the start of August. And so we're still in August as of live broadcasting here, as of the, what's the date here? The 27th of August. Not bad, 20-odd% for, less than 3 weeks type thing, roughly 3 weeks. And anyway, and away you go, and you can have a look. And look at this one here, 25 March, up a whopping 65%. Ticker code MAH, Mahon, did I pronounce that correctly? Holdings. Brilliant. And so you just have to log in each and every day and just double check to see what is taking place. Not a lot of work. You might do 2 or 3 trades a month, if that. Okay, here's one that's been held back since 2023 and hasn't moved since. Okay, so now, the next question then comes down to say, well, it's interesting that VectorVest offers this, but what if I don't really want to follow this? What if I don't want to have to log in every day and just see what's being held and sort of rebalance from time to time? What if VectorVest goes in and helps me identify these very stocks that you talk about? You talk about all stocks with solid, high-yielding dividends, with a strong track record of meeting or exceeding dividends. How did you find these, Russell? How did you bring these about? And so I'll show you the search I designed for this very portfolio. And so to do so, I'll go to a tool called Unisearch in VectorVest. And what Unisearch does is it ranks, screens, and sorts stocks for all sorts of key criteria. In this case here, all div payers works as follows. It simply works as follows. And you can load it up each and every day. You just come into VectorVest, you load it up, run the search. Here are the stocks. Now, just before we show you all the stocks, just to help you focus, because you're probably desperately wanting to look through the stocks. But let me just show you what it's doing. It's saying only find stocks from the All Ords. Make sure that those stocks have a dividend yield of 3% or better. Make sure that those stocks have a dividend safety. Now, dividend safety in VectorVest is on a score of 0 to 99. And in Australia over the years, we have found stocks with a dividend safety of 50 or better have a very good chance of meeting or exceeding their dividend obligations. So if you get a 50 or better score, it's very good. And make sure that those companies are looking to grow their dividends by 8% or more a year on average. So that's what we're looking at, the current outlook. They must be looking to grow their dividends by 8% or more. So the question then comes down to, I'll just move the camera back on here. The question then comes down to say, well, why do you want to look for these dividend-paying stocks? Why do you have to have high dividend-paying stocks from the All Ords? Well, 2 reasons. Reason number 1, the trading system has been designed to give you good yield and franking credits on average. But there's actually a more important reason as to why we've picked on those high dividend-paying stocks. And the reason being is because history has shown us that companies that are growing their dividends year in and year out are companies that are more likely to outperform the index. And you can go and you can have a look at, there's been numerous studies done, in particular in America. Companies that initiate and grow their dividends year in, year out are typically companies that outperform the indexes from which they fall in. So let's move it back over. Let's transition this back across. And so let's have a look. So we'll have a look at the first one here. We saw this in one of the trading systems, I believe. Fleetwood, here we go. So this has been the share price in recent times. Now, look, we're looking to buy it now. So yes, sure, it's been a little bit lumpy over here, but this is where we're looking to buy it because, we're running it as of now, 26th of August. So this has been the track record. I wouldn't necessarily rush out and buy it right now. But I'm going to show you something interesting on Fleetwood. A little bit volatile, but having said that, I'm going to show you something very interesting. Here is a 12-month leading forecast on earnings. So we do it at VectorVest. It won't agree with your broker or your fund manager or your research house. This is proprietary. This is a 12-month leading forecast on earnings. Rising, rising share prices. Sure as day. We've seen it time and time again. Rising earnings, rising share prices. And so when I look at it over here, it's no surprises to see this rising. Now, what do you think the dividends are going to be doing? So if I put on the dividends paid in dollars and cents, if you have rising earnings, are you more or less likely to be able to afford those dividends? Well, yep, you got it. You're more likely to afford them. Let's make it a different color so it stands out. Here we go. All right. So, and we'll make this an area graph just to re-emphasize it. So there you go. Rising earnings, rising dividends. And so you can go back in time and you can see here, falling earnings, falling dividends, falling share price. Here, rising earnings, rising share price, rising dividends. And so you can then look through some of the other ones that are being found for you here. Here's AP Eagers. This is interesting over here. Although earnings came off, they kept their dividends flat. Earnings are starting to pick up, but they still haven't ticked up the dividends yet. You're probably going to have to see a bit more earnings increasing before they do so. But having said that, here we go. Here's the turnaround in earnings. Here's the turnaround in the share price. All right, this one here, very interesting over here. Earnings have been slowly sort of trickling up and up and up. And all of a sudden, boof, up goes the share price in a big way now. And this is a very good sign when I'm seeing that with a company. If a company starts lifting up its dividends, this is a subtle indication that the company is very bullish about its outlook. Think about it. If you are the CFO at a company, Chief Financial Officer, and you control the purse strings and you're worried about the outlook on the company, are you going to raise dividends if you're paying dividends? Probably not. You probably say to your CEO and the board to say, well, look, things are looking a little bit tough at the moment, and perhaps we should just go a little bit easy on dividends because it's an unnecessary expense for us at the moment. As much as shareholders need those dividends and we'd like to appease them with dividends, we don't really want to incur that expense. We're a little bit under the pump at the moment, and so we would appreciate if we didn't have to jack up the dividends just yet. All right, much to disgust the shareholders, right? Because they're expecting dividends, or were they? If a company, on the other hand, comes out and says, well, here we go, things are going well, and we're pleased to announce we're going to give you an extra 10 cents on the share. Thank you very much. Here's an extra 10 cents for you per share. What do you think that tells you about their outlook? They're obviously feeling pretty good about things. Okay, so you can see KSL Securities. Interesting here, their dividends have been moving up, earnings have been moving up, but dividends have been sliding a bit. Now, there might be a good reason for it. Here they were paying, what was that, 11 cents. It's now come down to 10 cents. So, it's neither here nor there, but as a percentage, it is a fair percentage drop. So what's going on here? Obviously, they must be saying to themselves, look, we want to keep some of those dividends as retained earnings to help us drive this company further. Shareholders obviously feeling pretty happy because they've made very good capital returns. Earnings are going up, but if you're after dividends, you might be a little bit frustrated because it has just come down slightly. This one here, very nice. Up go the earnings. Share price was a bit lumpy. Now the share price is catching up, and you're seeing that nice stepping staircase on dividends. If earnings keep going up, you should probably see another step up. Okay, so that is the engine that finds them, and you can come in and find them. For myself personally, I just find it much easier to go to the trading system viewer, click in the all ordered system, load it up, and it's all here for me. It's easy for me to do. I don't have to really worry about much because it's doing it all here for me. It's got risk and money management rules built in, and it's doing everything for me, and it's listing it all here every day for me to have a look at, and proofs in the pudding in terms of those results. All right, so you can see the results of the last 6 months, 30%, etc., etc. Trading system rules uses a 20% trading stop loss. These are all the rules it applies. No more than 7% of a stock's average volume. No more than 3 stocks in a sector or industry. So it's doing all of the prudent work which you would expect from a sophisticated investing plan. Okay, and so it's presented on a plate to you each and every day, and you can then come in and have a look. And again, I can't give you advice. I can't say whether this is suitable for you or not, but it's all here for you. And so that was one such example. You've got 18 of these here. And I was sort of chatting to a subscriber the other day, and I said to the subscriber, I said, look, it's like having 18 hot stock newsletters, but instead of, a newsletter that would give you, hot stock tips for, say, a conservative system or a very aggressive system or speculative shares, you've got the full gamut here. And so just moving my screen back, you can come in here and you could look at a very prolific momentum trading system, phenomenal. And you can come in and have a look, and you can start to see, my goodness, look what's happening here. Look at all these returns. Here are some of those stocks. All right, but that might not be your cup of tea. You might say, well, I don't really like that. It's great, but it's too aggressive. And so maybe you're a real estate investment type investor. You do a lot of commercial, industrial, residential investing. Maybe you're a developer, but you also like to have some exposure via some shares. And so maybe the REITs, real estate investment trusts, might be something you're interested in. As interest rates are falling, so interest rates started to fall, look what's happened to REITs. Yeah, interest rates were going up. The real estate investment trusts were going down. High interest rates really impact upon real estate investment trusts. We're in a cycle now where interest rates keep coming down. Surprise, surprise, REITs are coming back up. So you can look at all the returns. They're all pretty decent at the moment. And here are some of those REITs being held. And you can then come and read up all about it. You can check out the rules. This is how it all works. Okay, and this is the way the stocks are screened, ranked, and sorted. It's all here for you. We ran an ASX Global Superstar ETFs course the other day. I'm not going to give the holdings away. I encourage you to do the course, take out a subscription to VectorVest, find out what the holdings are. I'm pleased to announce over the last 12 months, the 5 ETFs, which haven't changed since. The 5 ETFs that we noted in the trading system. So you just simply bought 5 ETFs. You haven't sold any of them yet. Well, over the last year, up 19%. Thank you very much. Talk about low work rate. 5 ETFs, you've done nothing since. Probably take you more time to go and open up a term deposit at a branch at a bank than to buy 5 ETFs via the luxury of sitting at home in your computer and placing a trade for 5 ETFs. And that's all you had to do. And so it's up a whopping 19%. Certainly beats any term deposit I've ever seen. All right, so there you go. If you're after something that's very, very simple to do, that one's really stacked up in recent times. Again, nobody can tell you what the future holds, but I have high confidence that this will continue to hold up based on the back testing we've done, but we'll have to wait and see. And so you've got it all here. Some of the other ones here. Safe and Sure. This one here is very conservative. Dare I say it, a bit boring. I designed it, so I suppose I can say that. But it's designed just to be slow and steady. Slow and steady. If you're after the racy type of returns, this would not be a trading system for you. And it's pretty much just gone flat since 2022. It's now starting to tick up again. Had some very good growth from 2013 through until about 2022, and then it kind of went sideways. But you wouldn't have known that COVID had taken place here or any of the other sort of ups and downs with the US election. It just plods along, slow and steady. So it's looking for a growth rate of at least 8% or better on company outlooks. It pays a 2% dividend, does less than 1 trade a month, in fact, much less these days. And anyhow, looking over here, you can see some of the most recent acquisitions. Slow and steady does it. So a lot of our subscribers like that type of approach. But me personally, I wouldn't be very happy with 6% over 3 years. Yes, and the dividends and franking credits, and it might take it up to maybe 12 or 13%. But, it's not for everybody. But there are some investors who like that type of approach. Okay, and so you've got them all here. One thing I like to do is I like to have a look what's performing the best currently over the last month. Oh, look, there it is, the one we looked at. Then it's REITs, look at that. All right, and so you can get to see them all here, how they're performing. And so I go and pick on those trading systems that are doing very well. So I've shown you a few of these here. Let's go and show you this one here. It's up 7% in the last month. Why is that? And so I come in and have a look and go, oh, look, this is starting to break out to the upside. All right, so here we go. Over the last month, 7%. What's driving it? And so I like to look at the return on investment. Ooh, there's one here. CMM. All right, it's done 158%, but it was bought back in 2022 nonetheless. Here's one recently, 16th of July, just the other month, up. And that was 2024, dare I say it. So a year ago, 140%. Let's see more recent times. 28 January, this one's up 36. So it gives me an idea, and I can then start investigating to see, what are some of these hot stocks that are performing really well at the moment. So I'd be very interested to know, like CMM. All right, well, hang on, why has it done so well? In the VectorVest trading system, growth in an income investor growth portfolio, it alerted me to CMM. All right, well, come into VectorVest, plug in CMM on the code here, load it up, have a bit of a look here. Let's put a simple layout, clean it up just a bit, just make it nice and easy to look at. Here are the earnings. Oh, okay, earnings going up, price going up. Oh, yes, that's right. That guy Russell mentioned, as earnings go up, price goes up. Straight away. There we are. If you want a hot stock tip, here's one such hot stock tip. And again, I can't tell you what you should or shouldn't do. Please speak to your financial advisor. But there it is. How did I get it? Went to the trading system viewer, looked at some of the best performing systems and got an idea. Let's just do this out of interest. Let's go to the high momentum system here. It's a brilliant one for finding short-term momentum. Look at that. Look at that equity curve. And let's have a look. What's knocked it out the park in recent times? Turn it upside down. Here we go. KCN, 2nd of May. It's already up 72%. Talk about the best hot stock newsletter you could ever hope to get. Not that we're a newsletter, but you've got all this at your fingertips each and every day. So I'd come into here, graph. Let's put in KCN, load it up. Right, so the VectorVest trading system had noted, that this high NPI system was doing really well. KCN was one of the best performers. Oh, yes, interesting. I might need to investigate further. So here it all is. If you want to make money in the markets, this tool here, the trading system viewer, I've designed every single one of these trading systems over a period of over 15 years working at VectorVest. And for some of our subscribers, it's really changed their financial trajectory. It's changed mine. Thanks VectorVest for all the tools you've given me. Thank you, Dr. Toledo, for designing and building this system. Our founder, Dr. Toledo, it's changed a lot of people's lives. And so here you go. It's all here. Just pick on what works for you. This is just one such segment in the VectorVest system. But if you're stuck for ideas, why not come into here? In the early days, I used to pore over financial statements and spend hours reading newsletters and going onto blog websites with the endless discussions with all sorts of hidden agendas as to why people were saying things about certain stocks. And it just became information overload. And I nearly gave up at that point. I'd had enough. It was just too much. It was stressful. And then I found VectorVest. And thank goodness, we just cut through all the noise and we give you the results. Here are the results. Here is what's working. All right, I'll just swing it back over. Here is what's working. Pick on the one that jumps out to you. Investigate further. It's all there on a plate. If truth be told, my all-time favorite trading system that I designed, when was this now? About 7-8 years ago, is this one here. The best stocks, less than $3. This is looking for the mid-cap type stocks. Look at that equity curve. And, you can see, it compounds. Its compounded rate of return is around about 14% a year. And so if you're wondering what compounded rate of return means, if you hop onto a website like Investopedia, compound return of investment is its total earnings over time, taking into account all gains and losses. It's the gain or loss on the investment reported as a percentage and annualized. All right. So, to be growing your capital 14% compounded a year is phenomenal. And you can see here it is. This is how it's grown. Now, word of caution, this will entail a bit of work. You'll be doing, probably 2 or 3 trades a month, sometimes more, sometimes less. But, I'm prepared to do that for those type of returns. And so here all is. Let's see, what is our best one? Here it is. There's that one that pops up again, Kingsgate Consolidated. And so you just come in, you look at the trading systems, it tells you. It keeps telling you, here's Fleetwood again. So when you start seeing these popping up in multiple portfolios, it's telling you a lot. And remember, these portfolios don't all use the same searches, very different searches for each one. All right, so this one uses a best stocks, less than $3-10 search. And so in wrapping up, the last thing I'll cover here, let's go and find you that best stocks, less than $3. So the search it uses, I'll just find it for you. And again, you don't have to look at all the searches. There's some amazing searches, but you don't need to cover all those. So best stocks, less than $3-10 portfolio. Just pick on one or two that work for you to begin with, and that's all you need. Best stocks less than $3. So here we go. So it finds stocks between $1 and $3. The 50-day moving average must be 50,000 trades or more on average. So we want liquidity. Comfort index, it's a great indicator. It's looking for smooth left to right price patterns. It's looking for resilience. So a comfort index on a scale of 0 to 1.2 is going to find you fairly smooth trending stocks, and must have made sure that on the day that you're buying the stock, of course, that it's moving, its trades are taking place. It hasn't gone into a trading halt. That's just to ensure that. And then we sort it via the best combinations of fundamentals and technicals. And so here you go. There's Kingsgate again. Here are all the stocks. And so you don't have to follow the trading system. You can simply just come in and run the engine that finds them like that. There's the earnings. Up goes the share price. And so you can have a look. We've seen Kingsgate. West African Materials, gold, one going up. All right. Plenty group, plenty of price action. That's the upside. Okay, so it's all here, and it's in the systems here for you. So anyway, hope you got a lot out of the presentation. When I'm stuck for ideas, that's exactly where I go to. The trading system viewer makes my life really easy to do. Thanks again. See you same time, same place next week. Hope you got a lot out of this presentation. I'll wrap it up for now. Thanks again, and bye for now.